Hey everybody, welcome back to 5 Minute Financial Markets. I've been away for a few days traveling, but ready to jump back in and pick up where we left off. So let's take a look at the S&P, the SPY. Since we last talked, the SPY has broken down into the bottom half of this parallel channel that we've been talking about for a few weeks now. Again, it started when we broke lower here on the really disappointing October CPI number. And ever since then, it's been in this upward trending channel, spending most of the time in the top half. But you see the last 4 days, we've closed solidly in the bottom half. But the last 3 days, it's found support right here at the bottom of this channel, which is a good sign that that channel is still holding up and still showing support, especially today where we bounced off and finished with a green candle for the first time in several days. Let's take a closer look at what happened intraday. So we opened up from yesterday. We gapped up a couple dollars on the S&P, opened right around 395. We've talked about before how the $5 increments on the SPY are really strong levels of support and resistance. So we opened here, traded lower at the start, came right down to this green line. Now what is this green line? This is the weekly low for last week. I've talked about this before. The weekly highs and lows for the last couple of weeks and the previous day's highs and lows for the last several days are often big levels of support and resistance. So you really want to keep those on your charts. The chart that I use when I'm day trading has a lot more lines than this, but it would be too cluttered on a video, so I strip it down a little bit. But you definitely want the previous day's highs and lows and the previous week's highs and lows on your charts. So if you were looking to make an entry here, this is a great place to do it. Obviously, it turned out to be a fantastic place to do it, as that was the absolute bottom for the day. I personally didn't get in here only because I have some other longer term long positions. I've got some calls out over the next couple weeks, and I wasn't looking to get longer. But normally this would have been a great spot for an entry on a short-term call option for a day trade. And if you did, congratulations, you got it right at the right spot. It blasted up higher, went through the 395 resistance level, but you see throughout the day it came back and retested that 395. Tested here, broke through, came back and retested several times. So really these $5 increments on the SPY are just absolutely critical levels of support and resistance. And then nice bullish move on the close. Look at, there's always elevated volume the last half hour of the day, especially the last minute of the day. But to see a nice strong move into the close on that elevated volume, it really bodes well for tomorrow. And we'll talk about the news coming tomorrow morning before the bell and shortly after the bell. That's really going to determine where this market heads next. Taking a look at the VIX, the volatility index or the fear index, we've talked about before, when the volatility index is high, that means there's a lot of fear in the market and you can see big price swings. You like to see a VIX under 20 to have a sustained rally, but most of the year we've been trading in this wedge, which has been between 20 and 35. And this wedge has been narrowing. The last few weeks or so, it's broken below this wedge and has been trading around these support levels. And we've talked about this key level of 22, which was support here, it was resistance here, and now it's just sort of chopping around. It keeps being drawn back to this 22 level, and where it heads from here is going to determine where the market heads. And like I said, that news coming out tomorrow is probably going to send the VIX up here to retest this previous trend line or back down to retest this one. Taking a quick look at the dollar, the US dollar index, this is showing more weakness. So the dollar's been so strong all year long, just a massive run starting in February, almost a straight line up. And then around mid-October, we started to roll over and show some weakness, especially in the first half of November. And now it's just sort of chopping around, heading lower. Anything that's priced in dollars is going to go up when the dollar heads down, and inversely go down when the dollar heads up. So if you're long the markets, you want to see the dollar heading down. And really, there's not much holding it up here. There's some previous support around 105, some more right here on 103. But I mean, it could easily fall all the way down to this 100, 101 level without much stopping it. And if it does, that's going to be a big, big positive for the markets. Here's an asset we've been talking about a lot lately and that I really like going forward, and that's silver. So last week we saw it break out of this upward trending channel, break through this purple shaded area, which has historically been a really strong level of liquidity, which means there's going to be a lot of resistance on the way up and a lot of support on the way down. But it just powered right through that, came back and retested a couple times last week back into this chop area, but then today it blasted right back up through it. This is a lot of strength we're seeing in silver. Part of that is just the weak US dollar. When the dollar's down, silver goes up. But we've also seen silver going up even on days when the dollar is up or flat, and that is a really bullish sign for silver. If we can confirm above this level, I think we go straight up to $25 an ounce before we see our next significant level of resistance. So finally, let's talk about the big news that's coming out tomorrow that's going to drive the markets for the next several days anyway. So 5:30 a.m. Pacific time, we've got the PPI, the Producer Price Index. Obviously, this year, inflation is the big story. Everything is driven by inflation because inflation determines what the Fed does. Do they raise rates and by how much? And so when you see a big inflation number, it's going to spook the market. Conversely, when you see inflation numbers that come in lower than expected, that sends the message that the Fed has done their job by raising rates, and now they can start to ease up on the brakes a little bit, reduce their rate hikes, if not eliminate them altogether, and then eventually pivot back to a rate cutting environment, pump more liquidity back into the market, which inflates asset prices like the stock market. So this is going to be a big one tomorrow. Shortly after the market opens at 7 a.m. Pacific, we've got the Michigan Consumer Sentiment, which is another sort of a precursor to inflation. The more confident consumers are, the more likely they are to buy, and then the more pressure that puts on prices. So, I've talked about this many times, but 2022 is sort of the bizarro world in terms of markets. You want to see bad economic news because that tells the Fed that they can start easing up. So normally you'd want to see a positive, strong consumer sentiment number, but right now I think the market wants to see a weak one because that tells the Fed they can ease up. So that's the big news coming tomorrow, but this is going to be dwarfed by the news coming out on Tuesday and Wednesday. Those are the big news items that are going to send the market screaming higher or crashing lower. Tuesday morning before the bell, we get the CPI, the Consumer Price Index. That's the big, important inflation number that drives the economy. Again, a lower inflation number is great news for the economy, great news for the markets. The very next day, we've got the FOMC interest rate decision. Right now, it's looking like a 50 basis point rate hike. That's what the market has priced in. I would be very surprised to see anything different than that. But what's really going to matter is what do they say in their statement and what does Jerome Powell say in the press conference 30 minutes later. The markets are going to be parsing every word he says, and you're going to see a crazy amount of intraday volatility while he's giving this speech. Once the speech is done, the market has time to digest the overall message. Then you're going to see the market start to move in a pretty big way, either up or down. Personally, I think it's going to go to the upside. I think the Fed is in the initial stages of a pivot. It's like turning a battleship. It's going to be a long, slow process. But we're, for the first time all year, starting to see indications that they think their interest rate hikes are working to slow down the economy. They're also seeing effects that aren't showing up in the data, these lagging effects that they talked about recently, which indicate to them that they can start to ease up on the rate hikes and let the work they've already done take effect and filter through the economy. Here we see what the market is expecting for that rate hike. 50 basis point hike is a 75 to 25 favorite, so a 3-to-1 favorite. Again, I'd be really shocked to see a 75 basis point hike come at this stage, and a 25 basis point hike is not even on the table. So I'm expecting a 50 basis point hike and some slightly dovish language that will send the market higher, but we'll have to wait and see on that. That's all I've got for you for today. I do have a longer video coming out, not the normal 5 or so minutes, but this one's probably going to be about 20 minutes. But this one's going to take a look in depth on a single day of day trading, looking at all the charts I'm looking at, all the decisions I'm making, and all the information and factors that are going into those decisions. I think it'll be an interesting case study, and so that'll be coming out shortly, so keep an eye out for that. If you enjoy this content, please hit the like and subscribe button, and we'll see you next time. Thanks.